You're listening to UCW Radio. In your face.
What we got here is a failure to communicate.
Oh, have I got your attention now?
For lack of a better word, it's good.
You know what I mean?
Money to be made in a place like this.
Money never sleeps, pal.
You're crazy.
You know what it takes to sell real estate?
It takes brass.
I'm falling, and I can't get up.
Hey!
All right, welcome to Money Never Sleeps. It's Monday. It's the Monday before Thanksgiving, and that means that politicians are not going to be seen until sometime next week. So it's status quo for now as it relates to any headway we would be making to avoid slipping off that fiscal cliff. The Dow closed up over 200 points, which was decent, and NASDAQ zipped over 62. Now, Apple, over the past few trading sessions, they dipped down a bit. You know, there was a lot of talk. People were looking at, for the stock to test the $500 mark. It came close, and those with vision, when that happened, they were actually buying. Look, this is a company that has the potential in being the first $1 trillion publicly traded company, and this is going to probably happen in the next 2 or 3 years. The only thing that may stand in their way is Microsoft, and Microsoft definitely a diversified company. There are a few that may say that it's seen its best days, but honestly, I think that the company is just warming up again. And this time around, they just may have that think tank that will be able to not only take advantage of a gap in the mobile unit arena, snatching market from Apple, because, not everyone wants an iPhone. They want a Droid. They want something else. But they'll also, in my opinion, I think they'll be monetizing their current assets and definitely monetizing their current relationships. And I think that we're looking at a stock price for Microsoft that we won't see in a year or so. So my opinion is pretty on the cheap side of things. Now, moving on. Today we are going to be talking about real estate and the fiscal cliff. Our first two guests know a lot about real estate. That's why we're going to have them on the show. And look, this is their stock and trade. So without further ado, let's welcome David Gadet and Sam Kakembo of Oxo Homes to the show. David, Sam, welcome to Money Never Sleeps. How are you guys?
Good, Lou. How's things?
Great.
Pretty good, thank you. I thank you for coming on the show, and you're going to share with us some insight. Why don't you let us know, or let our listeners know a little bit about Oxo Homes?
All right. Well, Oxo Homes is a Canadian-owned company, and one of our main things we do is we help snowbirds buy properties in the States. And we also expanded into buying and selling and buying and holding rental properties as well, as it's so cheap to acquire these properties and rent them out. So that's what we do right now, and it's really good right now. It's the best time to be buying real estate.
Okay, and you guys have been in this arena for a little bit now.
Yes, we have. Yeah, absolutely. Yeah, we're focused mainly right now in Florida, and also we're doing a lot of buy and holds and a lot of different investor strategies in Atlanta right now as well. We've been in Atlanta for about a year and a half now, and that's been a very lucrative market. A lot of people have kind of been jumping in there as of late, but we've been there for a while.
Okay, and now let me ask you this, guys. With you kind of touching on different markets along the Northeast, does that give you a good feel on what's happening now with everything that's happening here in the U.S. with us facing this fiscal cliff and how it's going to impact everything? But real estate is actually kind of jamming up now. So does this give you a better insight to what's happening in the real estate market itself?
I'm not overly concerned with the fiscal cliff as far as real estate goes. I mean, there's still a few lingering doubts as far as shadow inventory and things like that to see what's really going to happen with prices if they do start to release these all this built-up inventory. That's kind of got to depend. I know things are a little bit rough down there right now, but I'm not overly concerned about it, especially with the strategies I should say that we have in place. That being said, of course, the economy is in a little bit rough. We're seeing sort of the same thing in Canada now too, with our housing markets starting to take a turn for the worst over the last little bit. But our strategies that we sort of deal with each investor on an individual basis, so we're sort of trying to proof ourselves against anything that has to do with the clip, anyways.
Okay, and you guys are involved in the investing end of things, but some reports came out today, actually, that were showing more owner-occupied or first-time home buyers coming to the market and actually being able to pull the trigger, because I guess the banks are loosening up a little bit. Does that help, or does that hurt your type of business?
Actually, that's perfect for our business. A lot of our properties, what we'll do to give the homeowner some value is we'll do a 3-year lease option. There's 30 million people in the United States that want to buy right now, but because of their credit score, they cannot have access to funds. So if they're able to rent from us and then in 3 years purchase the property that they've been renting, it's a way of rewarding them. So it's actually great to see first-time home buyers in the market. And we haven't seen that for a while in Atlanta just because I guess right after the housing crash, people weren't excited to get back into real estate after they've been burned. They're more concerned about their net worth and just building their net worth and starting from scratch and renting. There's going to be people who are renters for life now, but there'll always be change. And so seeing the buyers come back is a great thing.
And do you think it was a good thing, in your opinion, when they kind of changed the, I guess they kind of shifted the foreclosure proceedings, and they allowed people to actually, find out a way to stay in their home and live in their home and continue to own their home?
Definitely, with the prices rising, it caused people to be over leveraged, and here. In Halifax, Nova Scotia, on the east coast of Canada, we're allowed to borrow up to 39% of our monthly income to pay our mortgages. But on the west coast, you're allowed to pay up to 80% of your monthly income. So that's a way people over leveraged. So in the States now, that the numbers have come back similar to the east coast of Canada, you can see, I guess the regulation is good, right? A lot of people say that the market should be free and the buyers should be making the decisions, but sometimes the herds, they follow. So to see that the banks are loosening up the lending and also changing their mentality, so not forcing foreclosures on people and giving them a chance to stay in their home, because some people just bought at the right time or at the wrong time. They did all the right things in life, and they just happened to buy in, say, 2006 or 2008 in that period, and it ruined, their finances. So, to give those people a second chance to stay in their home is amazing.
Well, do you think that, when everything happened and the financial crisis was upon us and a lot of foreclosures were happening, do you think it would have been better for the real estate market or for the economy, the U.S. economy, if they allowed just the foreclosure process just happen naturally, as it was happening, without the government intervention?
Yeah, I think it probably would have been. I think the real major bane on the housing market was the massive amount of foreclosures, because that's just as we know, the economy sort of works cyclically. So once you have media coming in talking about all the foreclosures and all currency problems, then nowadays Eurozone problems, it all sort of makes it sort of a perfect storm for the recession, as we saw. Because once everybody starts hearing about doom and gloom about foreclosures, and there's now, there was 500,000 more foreclosures from this time last year sort of news, then people start to get worried. People stop spending money, and that's when recessions happen, of course. So I think the massive amount of foreclosures that we hadn't seen before of course it did. It did hurt. But I think they're starting to come around a little bit now. They're also, in certain ways, making things a little bit more investor-friendly because I think, and a lot of people feel like investors are going to be the main people to help the economy come back, especially in the real estate market.
Yeah, well, I mean, you're 100% right about that because at the end of the day, any investor that's in the market, they're looking to profit. Okay, and I think, at least here in the States, that one of the big concerns is if they start to raise the capital gains tax. Okay, because that does impact people, whether it's in the stock market, real estate. You make a gain instead of paying X percentage, now you're paying a lot more. So that could be that can probably have a negative impact on investors coming in, small investors, and even large investors, hedge funds and things of that nature, because hedge funds are definitely involved in real estate. And you probably come across a lot of them.
Hedge funds are essentially trying to take over the real estate now. We're seeing hedge funds, some of the larger ones spending, I believe, something like $100 million a month now on single-family homes. Like that's a quota that they have to reach. So the average investor is going to have a difficult time keeping up with changes in inventory and going against competition like hedge funds. When you have companies that have billions of dollars to spend, it's tough to compete with. But we're actually lucky in a sense where we have ability to connect with various hedge funds that we can do business with, so we can sort of help employ those in our investment strategies as well. But like I said, hedge funds are absolutely going to become the dominant force in real estate in the next coming months and years. Absolutely.
No, I mean, yeah, of course, if they have the money, then they can do things and make moves that smaller investors can't. But I would believe that if banks have inventory and they're holding back, if they wanted to pull the trigger and liquidate, they can easily just pick up the phone and call one of these fund managers and say, hey, this is what we have. This is what we have on tap. Do you want it? And buy it in bulk.
Yes, and the banks with inventory at the beginning of the crash, they didn't know what to do. They had never had such a large inventory of houses. So when you were looking at foreclosures, you would see them. They were all a wreck. They didn't board up the houses because it looks bad in the neighborhood. But boarding up a house is actually a great way to conserve it, because when a house sits vacant, it can quickly deteriorate. So now that they have teams in place, property managers that come in and winterize these homes and make sure that they maintain the value, they can go and turn around and sell them. And that was the big problem, was they didn't have a way to liquidate the homes. They were kind of, lagging behind. And the investors saw an opportunity, but dealing with the banks was tough. So now that the banks, it's a way to survive, right? If you don't sell your inventory off, you can't lend or you can't borrow money. And that was one of the things that the president did, right? He's finding the banks that are sitting on inventory, and they are being penalized for having these homes because they can't count them as assets on their balance sheets anymore. They're liabilities.
Right, and that impacts their bottom line.
Yes, and now it's making them the biggest motivated sellers in the United States, where before it was people trying to short sale their homes. Now it's the banks.
Yeah, and look, there's definitely no shortage of investors or home buyers in the market. They're there waiting. They're waiting for a deal. They're waiting for the right situation for them. So I don't think it's a matter of the lack of buyers. I think, as you said, the banks becoming motivated sellers, that's the key thing. Because if they're not motivated to sell, they can hold on to it and sit on it until the market comes back, but that doesn't help anyone.
Well, that's exactly right, and that's the main point, I think, of the administration requiring them to loosen up a little bit on getting rid of the properties, because if they want to sit back and hold on to hundreds of thousands of properties each that they now have, and it's not a big deal on their balance sheet, if that was the case, then things would get ugly quick. Because if they're going to hold on those until prices shoot back up, then there's going to be a lot more issues. Absolutely.
Yes, and that will also lead into another issue, a housing crisis. There is so much population growth and very little construction right now because there's no lending to construction. And, like the homes we're buying, an example home, we're buying between $25 a square foot to $35 a square foot. The cost to build being $80 to $100 a square foot. It's not something that the contractors they're going to jump into building single family homes right now until the area can actually support their costs. So if the bank sits on these homes and sits on them vacant, well, all the people that have vacated the homes, they're moving in with family, right? And they're trying to save money for a few years, but eventually they have to move back out. On top of that, there's a population growth, and they're going to be expecting 400 million people by the next 10 years. So if all of these people don't have a place to stay other than with family or, cramping multiple families under one area, that's going to drive the rent prices up. So releasing this inventory is something that has to happen to maintain the current markets.
Well, let me ask you this, with everything that has transpired, let's say over the past, 6 months or so, and, of course, the banks having to move, they have to move inventory in order to loosen up the market somewhat. Lending regulations, the rules that are in place aren't, maybe now they're starting to help, these first-time home buyers to come into the market and actually do something. But do you think that the states themselves, the individual states here in the United States, that they're able to step in and do something, because they do have a say in what happens, don't they?
Yeah, the states, each state, and we've noticed a difference in Atlanta, to promote having investors come and buy these properties. Like, they have a problem in the inner city of Atlanta where the homes are old. And if you go outside of the inner city and go into the suburbs, you can buy, homes that are 10 years old, and you're buying them for $50,000, and you can rent them out for, say, $1,000 a month. In inner city, the investors were very picky, and they did not want to buy there. So what they did was the state gave you a 10-year tax abatement where you won't pay property taxes for 10 years, and it's on a sliding scale, and it kind of goes up a little bit every year. And when that happened, you saw all of the investors pile into certain zip codes where they started designating these, they call them enterprise zones, and that has stimulated growth in the inner cities. And when the investors come in and they're fixing up the streets or fixing up the houses and bringing, quality tenants into the neighborhoods, it's a great thing to help change a community. And also all of that money can be taxed, right? They're going to tax the income of the investors, and that will help pay for more improvements in the city.
And I think that's important, because a lot of people are under the misconception that the federal government, they can loosen up money and everything's going to be great. You can loosen up money, but if you're not getting incentives from the individual counties and individual states, it's a little hard to actually have the improvement, because, if you look at a market like New York is New York. California's California. You can't kind of compare the rest of the United States to big markets like that. You have other markets that need incentives from the states. Definitely.
One of the things we looked at was going into New York, and the biggest question we get is rent control. If I'm a landlord, what is the issues I'm going to run into with rent control if I have a tenant and I can't evict them? And so that will kind of stop investors from buying in that area if they're not knowledgeable on the topic. But rent control is only in a small amount of areas. It's not in the whole state of New York, right? So in, a lot of investors will say, well, listen, I can go into Georgia or Florida because I have more protection. It's more of a investor-friendly state. And so for the states to even change simple things like that can change an investor's mind, overnight. And they can say, okay, now I'm going to move my portfolio from, say, a little bit from Florida, and I'm going to go into New York because I know that my money is safe. And, so there's so many ways to make it attractive for a market, and they just have to look into creative ways of building the economy. It's not all about making the banks lend, but all about making it fair for the tenants and the investors at the same time. So there's a happy balance.
Right. Now, look, President Obama, he got reelected, okay, and that a lot of people, they had major concerns about a lot of different things. I guess my question with that to you, do you think that him being reelected had a positive, or did it have a negative impact on the real estate market moving forward into 2013?
The way the market is moving right now, there's a lot of change. Like there's a lot of change right now. So for investors, one of the things, like Fannie Mae, if you were buying a home from Fannie Mae, which is now government owned, there was a deed restriction on when you could sell that home and how much profit you were allowed to make off of that home. Recently, there's been a waiver. So investors, there's a lot of investors who are just wholesalers. So they're acquiring these properties and selling them to funds and selling them to firms like us. And it was limiting their, their inventory turnover, because they had to wait 90 days to 6 months, depending on the deed restriction on these homes. So one of the things that has been lifted is that deed restriction to allow inventory to come out at a faster pace. So the way it was working for us, we didn't have any issues getting inventory. So for him to be reelected, it just keeps us on the same path for the next 4 years. To have a change in power, I guess you could say, we would just kind of have to sit and wait and adjust our strategy to the new changes that are happening. So for us, it just keeps things the status quo, and we're going to see whether the prices come back up and how fast the housing market rebounds.
Okay, yeah, I mean, a lot of people had different opinions on him being reelected, and my opinion, I believe, when President Obama came into office, it was the wrong time, wrong situation. He came in at a time he faced adversity through the nose. But him being reelected,
I don't know if there's ever been another president that's came into a situation quite like him. He inherited just about as rough of a situation that anybody has seen in a situation. As far as economy goes, and of course the real estate was, one of the huge factors in the economy. The wars, everything. It was definitely a bad time. But so, as Sam was saying, for him to be still in office, I think it's not a big deal for us as far as real estate goes. Things are just going to kind of continue to coast along for people like us. Had Mitt Romney been elected, there would have been changes. Of course, the stock market would have felt it, and in turn, everything feels it a little bit in the economy when there's a shift like that. So, we'll just continue trucking along instead of having to wade through the changes.
And I think one of the biggest issues with President Obama being reelected is this fiscal cliff. But we will get through it. They will figure it out. There's no way that they're not going to figure it out. They will figure it out, and it's going to be a little late in the game, but they will figure it out. And once that happens, at least for your business, it allows you not to have to shift, because if you shift and if you're 3-4 years into doing something, you have to shift and change. It can actually have an adverse effect to your bottom line.
Oh, absolutely. One of the keys to being in real estate, especially where we are in multiple markets around the nation, one of the keys to being successful is to be able to adapt. Definitely. So I think investors, as kind of a type of person, are usually fairly adaptable to change. But you're right. Something like the fiscal cliff is, and you guys are coming right down to the wire. There's no question about that. They are a little late in the game, like you said. But if something like that is to not get fixed soon, then we're definitely going to have to adapt a little bit. Going to be some changes put into the investment strategies for sure.
Yeah, well, because as we were talking about, and everyone's talking about it, on every show, every news program, every financial news program, wherever, the papers, so all the fiscal cliff, the people are in this panic mode because they think, oh, we're going to fall off and no one's going to save us. But at the end of the day, politicians have an obligation, to follow through with this. They have an obligation to figure this out because it's not about Democrats, Republicans. It's not about that. Forget about, what party you belong to. Get down to business because you get hired, and you do get hired. You get elected, but you're getting hired to speak for the people, do for the people. So you have to do your job. And if you're not doing your job, then you shouldn't be in office. And that's my opinion.
Exactly. First and foremost. Yeah, that's right. That's why you're there in the first place. People feel you can do the job and get in there and do the job. That's exactly right.
Yeah, you're getting paid a few $100,000. Yep, you better do your job. You do it right.
Exactly.
But we're not going to see anything and any dramatic change between now and mid next week. It's Turkey Day here in the States on Thursday, and there's nothing really going to happen because as I said earlier, all the politicians they're heading home. They're going to enjoy the holiday, and hopefully next week, they'll start to get to work and really get to work and figure this out because look, I'm a Republican, but at the end of the day, this has nothing to do with your party affiliation. You have to stand behind the president. I want him to perform. I want him to do fantastic. I want him to show the resilience that this country has. And you guys being in the real estate realm, that's going to actually, him performing benefits you in a big way because the economy boosts up. People have more money to go buy houses and invest and do these type of things, and it just increases the value of the properties that you already own.
Definitely. One of the things we want to see is the United States come back as well. Being, I guess the little brother of the United States, a lot of our exports, 70% of our exports is to the United States. So when the economy slows down there, it slows down here, and it also around the world, right? There's multiple countries that are in trade with the United States that depend on the bounce back. Right, and I guess everyone's waiting. There's a lot of people on the sidelines as well when it comes to investors that are they're looking to see what's going to happen. And the big thing that changes markets is the buyer mentality. Most of our countries are consumer-based, right? So if the only people investing right now in real estate are investors, it is tough to turn a whole market because the investors have to take every house one by one and fix it themselves. Now, 2004 to 2006, when all of the boom was about, no money down and you can buy a house and make money flipping houses, it wasn't just investors in the market, right? It was people buying houses for their first time and fixing them and selling them. Now, it was a little bit too much. But when the consumer mentality changes, where people believe, okay, it is a good investment to buy a home, right? And they talk to their friends, and their friends say it's a good investment to buy a home. It's going to change the whole mentality of the country, and that's when everything is going to come back. So we're waiting on that as well because the investors can't do it all themselves, right? Like a lot of investors will make money, but we win as a team, we lose as a team, right? So it's the same mentality that way.
No, I agree with you. Look, pride and ownership is a key thing. You build that pride, more people own, builds the economy, and I guess one of the big things here is job creation. And once they start doing that, then more people will have the ability to actually get the home. So there are a lot of components here, but I think all of these components, if half of them go in the right direction, then it's actually going to help the economy in a big way. Now, Sam and David, what I want to do, I have Dave Breton with DJB Business Brokers out of Florida on he's on hold. He's going to come on the show, and I want to get his input on because he's involved in real estate and the business aspects of small business. So I want to get his input. So I'm going to bring him on the show, and let's see if we can get a different view, or it may be the same view that you guys have. David, welcome to the show.
Yo.
You there? You with us, David?
Yes, I am. Can you hear me?
Oh, yes. You're on the show with Sam Kakembo and David Gadet from Axo Homes. And why don't you give us your input on the state of real estate now?
The state of real estate. There's two different aspects in the territory that I'm working in the Tampa Bay, St. Petersburg market. There's really seems to be a shift and an influx that's going from the residential to the commercial side, and you're seeing a lot of on the commercial side when it's entitled with businesses that are a going concern within the property. You're seeing almost like a lending freeze on the business side where they're only getting lent on the hard assets. So though we are seeing some pickup in the SBAs and the SBA 7A programs, there still seems to be a tighter standard on the conventional lending from the local banks. On that standpoint, it seems like the residential side in the Tampa St. Petersburg market is picking up. So that's getting a little bit better, but the commercial side is still a little bit tight at this point. And then on a whole macroeconomic scale, we're seeing. I think this is pretty much a theme across the U.S., not just in Tampa, but it seems that a lot of people are in a wait and see mentality as we're approaching the fiscal cliff, and where it seemed like there was a lot of people ready to pull the trigger when everything was status quo with the re-election of Obama. We just saw everybody kind of freeze a lot of their plans until we see what happens in the first quarter of 2003.
Are you seeing the same thing, David and Sam?
Definitely. Yeah, we were definitely seeing that because just talking to our networks all over the country, and they were all talking about, yes, you should wait, park your money until the election, and then we'll devise up a strategy for the next year. So now that it's passed, we have 4 years to look forward to, and we can set our strategies into what we're going to do, right? How are we going to find lending? What is our exit strategy? So everything for us, it stayed the same, right? And if it was opposite, we might have had to sit down and say, okay, now here's a new strategy that we need to look at, and maybe we have to look at new cities and start doing research all over again. So for us as investors, yes, we were waiting and seeing what the results of this election was going to be, and now we can continue as is.
Hey, Lou, one of the things that that we're seeing almost on a hyper speed, but time is going to run out. This is more on the small business cycle versus straight real estate. But for those that are lucky enough to have capital gains on the sale of a business, we're seeing a lot of people that are really trying to get out before December 31st. So they're going to be accompanied to this year's capital gains rate versus capital gains rates going into 2013. More importantly than that is any sale is depending on how their corporate strategy and corporate structure is encompassed. Is when a sale of a business is happening, those funds, though, it could be owned by a mom and pop local business owner. Those are actually funneled into a corporation, and then those are dispersed out. So some of those are going to be on a dividend rate, and with those taxes going up too, we're seeing a rush for the exits for the people that can actually get out before 2013, and then for people that are trying to buy in, it's almost like a perfect storm that's happening because the people that have the capital that are looking to get in are waiting to see what happens in 2013, and then on the sell side, you're seeing people that are trying to get out before the tax hikes go in, and it's really a factor whether it's Main Street business, lower middle market, and then middle market is a different metric altogether. But you're kind of seeing that same caveat play out throughout the entire U.S. just with the with just the tax rates that are coming into play in 2013.
Yeah, and that's something we're going to talk about in the next segment, David. We're going to keep you on the show because I want to touch on that perfect storm, because I think that's an extremely important part of what's going on now, because it's not just, you don't just have one component. It's not just, everybody, having nowhere to hide, because you have people that will go and take advantage of certain opportunities. Some people will shift into other opportunities. So there are a lot of things that will be going on as people speculate to what's going to happen. So
the other thing, very, 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 very broad strokes, but a lot of the small business owners, and when I mean small business owners, I mean revenues under $1 million, the local mom and pop pizza shop, deli, restaurants, things of that nature. They're feeling a lot of the poor prices of their cost of goods are going up. So, a crate of, a pound of beef is much more expensive now than it was a year ago. But they don't have the pricing power on the end part to the consumer, where they can raise it because the discretionary funds on the consumer end aren't as high. So you're seeing a real squeeze happen on the small business owner. And when you put that into play with tightened lending standards and, increased corporate and government regulation, it's a real squeeze on these entrepreneurs. So, I want to give a shout out to all the small business owners and entrepreneurs that are out there. It seems like they're fighting an uphill battle. This is when the true character of that entrepreneur and what makes this country great. And it's nice to see that spirit that's still alive.
No, I agree with you 100%, David. But I want you to hang on there, because we're going to bring you on to the next segment. David and Sam, your input on the real estate market, was definitely informative. What is your next move? Before we go to break, what is your next move? What are you guys going to do as we head into 2013 with everything that's upon us, with everything in flux right now?
I think we're going to stay basically the same as what we're doing right now. We're also going to try to get into more multi-unit activity. Definitely, that's always kind of a safe haven for your money. Apartment complexes, things of that nature. As well as I mentioned earlier in the show as well, is really joining forces with some of the larger hedge funds that we have connections with. As we discussed earlier, we can't beat them, so we might as well join them, right? So that's kind of going to be the focus as they start to take over large parts of the real estate investing market. We team up with them, and we keep getting the returns that our investors need. Okay,
that's great. So I think that you have a plan that's going to work for you guys. I have no doubt about that. Can you just let our listeners know how they can find out more about you? Because you may have people out there that may have a question, or they may want to do business with you. So why don't you just shoot
absolutely, absolutely. Yeah, absolutely. It's www.auxohomes. That's AUXO homes.com. That's a website. You can send us an email there to info@auxohomes.com. That's a great website for people to visit, just to get some more information on what we do. It's got some great tools and resources on there to really educate people how to make money through real estate investing and what their options are to make money with us. You can also follow us on Twitter @AuxoHomes, and we have a toll-free number that they can call anytime. That number is 1-888-535-2896, and they can call at any time, and somebody will be happy to talk with them.
Okay, great. David, Sam, thank you for coming on the show. David Baton, stay with us. We want to bring you into the next segment. But David and Sam, thank you for coming on the show. It was informative, and I like to have you back on, because as things change, as we move forward, things are going to change, and it's going to impact your business. There's no doubt about it. Because, when it comes to the finances here in the States, it's going to impact the small guy, which impacts real estate first-time owners. So we want to bring you on and get your feedback.
Absolutely. Let's stay in touch. That'd be great.
Thank you very much.
Okay, great. Thank you so much, guys. And we're going to take a quick break.
Right, Lou.
And we're going to be back with John Dines. He's going to be our special guest coming up, and we're going to stay with David Breton of DJB Business Brokers, and we'll be right back.
The Palestinian civilian death toll is mounting Monday after Israeli aircraft struck the Gaza Strip. At least 4 people were killed, 42 injured, up to 15 more are missing. The airstrikes are an attempt to crush militant rocket fire from Gaza that's been hitting Israeli civilians. President Obama is encouraging Myanmar to continue its transition to democracy.
Let us remember that in a global economy, a country's greatest resource is its people. So by investing in you, this nation can open the door for far more prosperity, because unlocking a nation's potential depends on empowering all its people, especially its young people. This nation that's been so isolated can show the world the power of a new beginning and demonstrate once again that the journey to democracy goes hand in hand with development. I say this knowing that there's still countless people in this country who do not enjoy the opportunities that many of you seated here do. There are tens of millions who have no electricity. There are prisoners of conscience who still await release. There are refugees and displaced peoples in camps where hope is still something that lies on the distant horizon. Today I say to you, and I say to everybody that can hear my voice, that the United States of America is with you, including those who have been forgotten, those who are dispossessed, those who are ostracized, those who are poor. We carry your story in our heads and your hopes in our hearts.
Hostess Brands will be in a New York bankruptcy courtroom to start the process of selling itself. Hostess is the maker of Wonder Bread, Ding Dongs, and Ho-Hos, and its Twinkies alone have brought in $68 million in revenue so far this year.
Unfortunately, yes. It started as a reorganization and today moved to a liquidation because we simply could not get enough workers to come off the picket lines to return to work and restore normal operations.
So the value of the company with no debt, with all of its debt wiped clean, which is basically what we're talking about when we're talking about, coming out of bankruptcy court, probably could be in the $1 billion range. This time next year, you'll be able to go in and most likely be able to buy your Twinkies and your, other Hostess products.
Butterball Turkey Talk Line, how can I help you?
And when that phone rings and we say good morning, Butterball Turkey Talk Line, how can I help you? We don't know what we're going to get, but it's always a joy to answer those questions.
It's because many people really feel like they planned well and they've got everything down, and all of a sudden their stove breaks. All kinds of things can happen. You just name it. We could not have a list of every call that we get because it's just such a wide variety, which makes it fun for us too.
Funny call. Probably the gentleman wanted to thaw a turkey, and he wasn't sure exactly where to set the dial for thawing the turkey. And I said, the dial on what? I thought maybe he was going to try it in the oven. He had it wrapped around. He had wrapped around the turkey an electric blanket, and he wanted to know where to set the dial. I said, oh my goodness, have you turned it on yet? No, he said he hasn't. So I said, take it out of the blanket, put it in a large sink or tub of cold water, and that 12-pound turkey will thaw in cold water in 6 hours. So we saved the day. He can cook the turkey, but he was in a hurry.
Even now today we have Facebook and Twitter and Pinterest, and then you can go live chat through the Butterball.com. Even this year we have a Butterball app, so we are so contemporary. First mother-in-law, the mother-in-law coming over for the first time, and she wants to do, really impress her, and she's scared to death of how to do it. And we've had them where they've been calling from the back room, because trying to make sure that they're doing the right thing. So
we're largely hand holders for people who are maybe cooking their first turkey, and that could be at age 19 and they're away at college with friends who aren't going home for the holiday, or it could be somebody 79 years old who's cooking their first turkey.
Home sales activity was at an annual pace of 4.8 million, with a median home price of $187,000. That's up 9.5% from the same time last year. According to Freddie Mac, the national average rate on a 30-year fixed-rate mortgage fell to 3.49%, a new historic low.
All right, welcome back to Money Never Sleeps, and we are here with David Breton of DJB Business Brokers. He slid into the next segment because we were talking about the perfect storm, and we're gonna touch on that really briefly, and then we're gonna bring on John Dines. But you know, you just heard about Hostess, the Hostess situation. Look, in my opinion, no matter what happens to the company, its brands will definitely live on. We have seen that in everything from food and beverage to even the tech sector. Case in point, look at Circuit City. They went bankrupt. They went out of business. Someone picked up the brand, and now they turned it into an online retailer, and they're flourishing. So with that said, David, welcome back to Money Never Sleeps. Let's talk about that perfect storm.
Boy, you just want to start off on a good note. Perfect storm right away. All right.
Definitely.
Let's get right to the fun stuff.
Let's get to it.
All kidding aside, the perfect storm. We're in a definitely a very unique point in business in America right now. And what I mean by that is we're seeing core prices on goods and services go up, but the pricing power on the end unit isn't. You're not seeing an acceleration to be met on that point. So the small business owner and entrepreneurs in a lot of the spectrum, especially on the Main Street businesses, your local pizza shops, your local restaurants, the ones where you go in and you know the owner's name, they're getting squeezed on the middle. And what we're seeing is tightening lending standards, core prices going up. The end user is not absorbing that retail markup at this point. We're also seeing where the capital gains and dividend rates are going to be going up in 2013. So there are people that want to enter the market, there's a lot of fear that's going in. So you put all these together, and it's almost like the entrepreneur, small business owner's worst enemy, worst time right now, just encompassing fear, uncertainty, higher taxes, higher cost of goods, and it can't be passed on to the end consumer because a lot of that discretionary money from the local consumer isn't there to offset that cost. So that's why I think we're on a Main Street market, we're seeing a perfect storm.
Okay, and in your opinion, because I know you have to go in a second. I just want your opinion on this. What could be done to help that situation or avoid it?
Well, Lou, you know that, like just like you, a lot of our backgrounds, Wall Street, and I think that I believe in the entrepreneur spirit. I believe in the heart of it, and it seems like every time we come to this type of crossroads where it almost feels like the world's ending, what happens is when America is forced into a corner, they come up with something great, whether it was the Industrial Revolution or the information age. A lot of people right now are thinking we're going to start going into new energy or nanotechnology. So to specifically answer your question, I think it's going to be some type of new market that generates an influx of different types of jobs, because it's not the same jobs that are going to be created as we go forward. If you just think about where we're at now, just in your everyday life compared to where we were as a society 3-4 years ago, it's almost night and day. Simple stuff as far as how business is done from social media marketing. I mean, that something as simple as that has had a dramatic impact on advertising. Just look at advertising budgets. So, something as simple as that, but I think we're starting to go into so many new fields that are entering our market. I think that is going to be the solution, where some people might still be looking at, or some politicians might still be looking at creating jobs in the same fields that, unfortunately, a lot of businesses, they go in cycles. So some of those are phasing out just through technology, and we're seeing a resurgence in new and exciting markets. I think that's the answer to your question.
Okay, all right, thank you. That's fair enough. Now, David, I know you, again, as I said earlier, you have to go. Why don't you let our listeners know how they can find out more about you, how they can reach out to you, because I'm sure you may have people that want to contact you that, in your neck of the woods that may have a question or may want to do business with you.
Sure. The best way is just visit our website is djbbusiness.com. If you Google DJB Business on any of the social websites, we're on all of them, and we're on a lot of different websites and blogs. It's just a matter of what your forte is that you like. But if you just Google our name, or the easiest way is just go to our website. They all link into it. Once again, that's www.djbbusiness.com. All our contact information is there. We're available. Video chat, emails. If you have a cell phone, you can get in touch with us.
Okay, excellent. David, thank you so much for coming on the show and giving your insight. We're going to bring you on definitely, for future shows to give your insight, because you have a view of small business that we need at this time. With everything that's going on. But I want you to have a safe trip. I know you're driving out to New York, so have up to New York, or however that works from where you're from.
When I get up there, make sure you save me 5 minutes so we can share a coffee.
Yeah, I'll give you 10. Don't worry about it. But have a safe trip, my friend, and have a happy Thanksgiving. And again, we'll bring you back on. Okay.
Sounds great. Thanks, Lou. Have
right.
a good Thanksgiving. Bye-bye.
Thank you. Thanks. All right. With that said, we are going to be talking about the fiscal cliff that we're facing, and we're going to get some insight from the CEO of REO Capital, John Dines. John, welcome to the show.
Thank you very much, Lou, for having me.
Oh, well, thank you for coming on. We had you on before. You gave some great insight. You're going to be a regular on Money Never Sleeps, which is fantastic. We're honored for that. As we've been talking about throughout the whole show, is the fiscal cliff, how it impacted real estate and how it impacted small business, but it's impacting everyone, hedge funds, everyone. Look, President Obama, I look at him, I'm like, he's like Tom Brady of the New England Patriots. It kills me. Just when you think they're down and out, all of a sudden, out of nowhere, some Houdini stuff comes in, some magic happens, and they put an additional 21 points on the board. And Obama, he has some magic. We just don't know what it is. So what's your input on what's going on with Obama being reelected and the fiscal cliff?
Well, you're absolutely right, Lou, about its effects, because it's going to affect everyone who receives capital gains from dividends, to CEOs who are looking at cuts and holding back investments, to increased taxes in not only from Obamacare but increased taxes in your payroll, increased taxes, and just the average amount of ordinary income taxes you're paying. It's going to be very painful for many people to endure over this next 4 years. And frankly, I guess my take on it is that I'm stunned that with the track record that President Obama has ran on, that he could not have been beat by the GOP. And I think Bill O'Reilly said it very clearly. That and Romney also alluded to it in that secret taped video where he alluded to the fact that 47% of all Americans believe that the government needs to take care of them, and they indicated on the news that 70% of Asians voted for Obama. 90% of all African Americans voted for Obama, and Latinos, 90% of all Latinos. And O'Reilly said that this has become the society of entitlements, that more than 50% of Americans now believe that the government needs to take care of them, and that they knew Obama was going to be the president that was going to give them stuff, and that Romney was going to make cuts. And therefore, it was an easy decision for those minority groups to vote for someone who is going to give out more entitlement. Let's face it, the Obama administration has gotten 32% increase on food stamps and 70% increase on welfare.
Well, let me ask you a question, John. Those entitlements, those entitlements are on the chopping block because something has to give. You can't have all these entitlements happening. And I think, oh my God, what is the deficit on that? It's $500 billion. There has to be something has to give. Something has to give one way or the other. And I think Obama, he's in a lame duck session right now, but he needs to actually do something because I said this earlier. Politicians, they're hired by the people to do for the people, to do the right thing. No matter if it hurts, it hurts. You got to do the right thing for this country because this is hurting the country.
Right. The fiscal cliff would raise taxes by some $800 billion, and unfortunately, so far, spending cuts have only been approximately $100 billion. So we need to not only offset that increase in revenue with some spending cuts, and that deal has not been worked out yet, and that's the real issue behind the financial cliff. We have to have revenues, but we also have to have spending cuts.
Yeah, because if you increase the revenues, is that paying for the entitlements, and then how are you having growth?
Exactly. GDP is bound to fall, and already several CEOs, according to the Wall Street Journal, have said that they have made contingency plans for layoffs and prepared for sharp economic contraction, which is going to hold back investments.
And right now we're just under 42 days until we go over that virtual, it can be a realistic fiscal cliff. A lot of things happen. If they don't come to terms, if they don't figure this out, it's interesting how the Department of Education, they're going to get hit with a lot of cuts in their budget to the tune of about $4 billion, and that includes student aid. So that actually that actually hurts us as a nation because you need education, get educated, build, and become you have that entrepreneurial spirit. You get educated. You're contributing to the economy. Okay, 2 million jobs in jeopardy doesn't seem like growth to me.
Right, and of course, they want to make large spending cuts on defense, and that is opposed by the GOP, and there needs to be some compromise. And according to Forbes, they said certainly the fiscal cliff can be avoided, but it simply involves Congress and White House coming to terms on a deal that would extend the Bush tax cuts for some or all, along with the possibility of extending some tax relief to payroll tax cuts as well. And at the same time, parties need to work on an agreement about how to lower the deficit without throwing the economy into a tailspin.
Well, Boehner said he was open for that, and he said that we needed Obama to be the leader at this point, be the leader that this country needs. And the entitlements, everything, you have to cut what you need to cut. Even if it's painful, you have to do it.
Right. And I think that Boehner had a valid point there. There needs to be more than just tax increases and spending cuts. There needs to be tax reform. And we can and Steve Forbes many years ago had the flat tax of the 19%, and that would simplify the tax code. And Boehner has implied that we need to simplify that tax code because ultimately the ordinary income taxes rates are going to go up from people who make incomes of almost $400,000 from 33% to 36%, and of course they were going to go ahead and go up for people over $1 million, would pay at least a 30% tax rate, and then of course all the other tax increases. Not to mention the Obamacare. They've indicated that $70 billion alone in just operational expenses in running Obamacare is going to cost the average American who is making $40,000 or more. Obamacare will hit their pocketbook for an additional $4,000 in tax increases just to pay for Obamacare. And they said the only people that are going to benefit are going to be the lawyers.
Mm-hmm. And you know, people have a misconception that this is that the impact or that where the money's going to come from and all this stuff is, you know, that people, the wealthiest 1 or 2% in the country, that those are the ones that are being sheltered. But the reality is that 1 or 2% is only about 1 or 2% of the problem. Okay, you have a bigger picture here that no one wants to tackle. You have a big elephant in the room that has to be addressed. And I think in 2010 with that Simpson Bowles, didn't they come close to having it? And I think that Simpson Bowles was similar to what Mitt Romney was trying to bring to the table.
Right. And ultimately, Lou, you could raise, and what's interesting about the Democratic Party is they don't imply as to what percentage is fair, what percentage the taxes should be raised. Should the top 5% pay 50% in ordinary income tax? Should they pay 75%? Should they pay 100%? But ultimately, even if they paid 100% in taxes, it still would not reduce the $16 trillion deficit by maybe $500 billion at most.
And that's why I said that's a small part of the issue at hand. You know, there's a bigger picture.
Right.
And that's something you're absolutely correct that has to be fixed. Definitely has to be fixed. You know, these entitlements, you know, it's great, you know, you have health care and people, you know, Social Security, you know, people need, you know, help and this and that. The reality is that you can't help if you're not promoting growth, because all that's going to happen, this country is going to be crippled. We're going to be crippled.
We'll end up like Greece, where 75% of the economy is dependent on the government.
Yeah, and over there, forget about it. They're getting another bailout, and they haven't done one thing in Greece. They haven't liquidated any of the state assets, but they want more money, and they'll probably get it too.
Right. They want a handout because no one wants to make concessions.
Yeah. I think that's their entitlement.
Yeah. But ultimately, there's going to have to be some reform on Social Security. There's going to have to be some reform on the tax code. There's going to have to be difficult spending cuts. It's got to be a combination of various different programs that are all going to lead towards that deficit reduction.
Right. Yeah. Look, when Reagan was in office, you know, you mentioned Social Security. I believe that he had some Social Security reform, and I believe that he reduced the age, and he made it. You would only be able to get these benefits up to the age of 16 or so. You know, and a lot of people barked about it, but at the end of the day, you know, at that point in time, there was a big, you know, we were doing. The country was building up. There was a lot of growth. Right now, I believe with that, I think the age, the cutoff, I think it's like 21 or 23 if you're going to school. You know, if you hold someone's hand too long, you know, at that age you should be out, you know, having the ability to at least grow and contribute, you know, to the economy.
Right, and many companies right now feel that their fear is failure to resolve this fiscal cliff will tip the economy back into a recession by stifling consumer spending, damaging investor confidence, and eating into corporate profits.
And I believe that, like right now, even as of today, John, Walmart, they were going to issue their dividend in late January or early February, and they opted to issue their dividend before the end of the year so that people won't get hit with the capital gains increase. And a lot of other companies are following suit. Do you think that's going to be a trend now as we go into the next 42 days?
Yeah, I think that will be a trend, and I think after that point, as it is presently, many companies, including Apple and others, are sitting on a lot of cash, and they're very reticent to make any type of capital expenditures for obviously fear about the increased tax and how that will affect that. So there's going to be. Ultimately, I truly believe we're going to dip into another recession, and even President Obama himself, yet a couple of years ago, implied that not extending the Bush tax cuts would, in the economy state of mind in which it was a couple of years ago, would be detrimental to the economy. And here we are now in higher unemployment, lower GDP growth, and he's drawing a line in the sand to go ahead and make sure those Bush tax cuts expire.
Yeah, well, I think, I know a couple of years ago, and I made mention of it, the Simpson-Bowles deal that they were going to execute, and they just couldn't push it through. And from what I understand, and I could be wrong, I don't think I'm wrong, but it was the Democrats that kind of stonewalled it and didn't allow it to go through. And again, a lot of those points in that plan, Mitt Romney, he was trying to bring it to the table. Okay, and look, at the end of the day, we need jobs. We need jobs. There has to be job growth.
Correct.
And, increasing taxes and increasing entitlements, it's like, you have a lot of stuff going up and out. Like here, there's one for you, one for me. Two for you, two for me. It doesn't work when the money's coming in and going out. Because, if you do that in your normal life, you wind up broke.
Right, and as I mentioned on your previous show, that you can't, President Obama yet has not learned that you cannot spend your way out of a recession, and you do not stimulate economic growth by raising taxes. If anything, it stifles economic growth. That's pure economics 101. And for him to go on national television and say that trickle-down economics didn't work, and to constantly blame the previous administration when, in fact, his administration is taking no blame for any of the consequences that have taken place as far as that raising of that deficit is unconscionable.
I'm not going to argue with you on that, because a lot of things could have been done differently, over the past couple of years. They haven't. Granted, and I said this early in the show. President Obama, when he came to office, when he was elected, he faced adversity from day one. Probably the worst adversity that any president has faced coming into office. So I'm hoping, and I have high hopes that he's able to step up and actually, change things and invoke change. And that's where we're at right now. We're at an impasse. It's either something's going to get done or we're going to have a big problem, and it doesn't just affect the wealthy. It affects the middle class. It hits them directly in the head, and you'll have increased poverty, and that's the reality.
Right, and the reality is that 97% of Americans are going to feel a tax increase, and for the president to say that 97% will not see a dime of their taxes go up is pure fabrication. It's just not going to happen with all of the expenses, and part of that issue that you just mentioned, Lou, was when Obama pushed through Obamacare, there was no bipartisan negotiations. That was slipped under the radar by the Supreme Court to vote on it as an additional tax, and it was passed without anybody knowing what was taking place consequently, now we are going to pay the brunt of that. And when you have 30 million Americans that are do not have health care at the present time, do not buy health care for whatever reason, and now you're going to infuse them into the medical system. I'm sorry, Lou, there's not enough doctors to go around to treat all of those patients, and what's going to happen is there's going to be more class warfare. The wealthy will pay cash and will get better treatment, and I've already talked to doctors that have said they are going to turn away Medicare.
Mm-hmm. And that's their right. That's because you're a doctor. That's your business.
Right. And also small businesses. In your show previous, you were talking about small business. Well, when you get to 49 employees already, the food chain, and not Chili's, but some of the other food chains have indicated that they are going to cut hours, cut employees, so that they can avoid the additional cost and that they're going to incur by being mandated to take Obamacare under that additional expense.
So as opposed to someone working a full 40-hour week, they may be working 29 hours to avoid them getting hit with that, and it's going to affect the economy, jobs, people have less income, and then their discretionary spending is not there. This is going to be a hell of a ride. That I do know.
Correct.
Because if they don't make the right moves, tax rates will rise for over 120 million households. That is an amazing thing to me. Okay, where
right.
I mean, the rate's going to go to what? I think 30, 38, 39, 5 or something like that. 39.5%.
Going 39.5, correct.
Yeah, that's incredible. That's incredible.
Right. And that's just on ordinary income. That doesn't include taxes on capital gains and what you spoke about in your real estate segment. Those people just doing real estate transactions are, of course, going to be affected. People who own mutual funds are going to be affected. Everybody's going to be affected.
Yeah. Once you start, booking profits. I mean, if you have an investment, you're not moving it, you're not realizing the gains. Unless they start changing that rule too, and you have realized gains on paper. But once you start moving money around, that's you're going to start paying tax on those capital gains. But if you're just holding tight, not moving money around, then the circulation of money is not helping the economy. It's just stagnant. It's just there. It's not doing anything to help make things robust. And again, there's so many different things that are happening. Then in February we're hitting that deficit ceiling. So it's like something needs to transpire.
Yeah, they said that half of the nation's 40 largest publicly traded corporations have announced curtail on capital expenditures this year and next year as a result of the fiscal cliff.
That's amazing. It's amazing, and that's going to stifle their growth. And these companies, they're the ones that are hiring people. Small business, they're hiring people. If you don't give them incentives to grow, then really, what service are you doing? This is why egos and all the hand slamming on the table has to stop. It has to.
Yeah, they talked about how it's my way or highway type of position on Congress and in Washington has got to stop, and this is going to be something that, as you mentioned earlier, is definitely going to affect companies that doing hiring. It's going to stifle not job growth, economic growth, capital expenditures, and the list just goes on and on and on.
Mm-hmm. I remember Warren Buffett when just talking about increased taxes. Warren Buffett has always stated that he has no problem paying his fair share of income tax, but he's not his ordinary income. It's like overshadowed by his capital gains, so it doesn't really impact him too much. It's the regular Joe, the 9 to 5 workers, the middle class that is going to get impacted. impacted. And I wish, with Steve Forbes and his flat tax rate plan, I think that makes a lot of sense. But then they're not going to come anywhere near doing something like that.
Well, Forbes said when it's all said and done, the expectation on the average American household will be paying $2,000 to $3,000 more in taxes each year, leaving them with $2,000 to $3,000 less to spend in our consumer-driven economy.
And that's going to have more people looking for these entitlements.
Exactly. More food stamp applications and more
well, yeah, every Medicaid, Medicare, you have any entitlement that's out there, the welfare, all
welfare.
I mean, yeah, if you're taking money away from people and they can't, meet their obligations at home, you force them to do something. Either they're going to get 2 or 3 jobs, or they're going to be forced to look to the federal government for help. I don't know of any. I mean, this country, why would we want people to be at the mercy of the government? The government's there for the people, and the people have to rise.
Exactly.
And I think people should speak up, and they should call their congressmen, call their senators, get on the horn and tell these people how you feel, because, even the poverty-stricken, areas, they think that they're not going to get impacted. They're going to get hit on the head as well. Everyone is.
It's also the payroll taxes, that program, those tax cuts that we're giving for average Americans, they're going to see that payroll tax extension expire. That's going to go up from 4.2% to 6.2%, which means there again also less money, smaller paychecks, and people are going to also receive smaller Social Security checks as well.
Yeah, and then you'll also have kids that are in school now. They're maybe in middle school, they may be in high school, looking to go to college now. The money's not going to be there for them to go, and if they do go, are they going to have work coming out of it? Maybe with the next administration, but we don't know what damage is going to take place now. We're resilient, and we spoke about it with David Baton earlier. We're resilient people. This country is resilient. However, how much adversity can you throw in someone's face before they get to their knee and have to take a breath and try to come back? It's difficult.
I feel for the kids in college coming out in this very competitive job market, and of course, as more corporations are going to be cutting back on capital expenditures, which includes hiring, it's going to make it tougher for those kids who are even qualified from the Ivy League schools to get jobs. Subsequently, all that debt that's incurred from getting a college education, I'm afraid, is going to be not taken care of, and there's going to be more students who end up waiters just to pay their student loans.
And it's like debt. It's like keeping people in debt, and it's a form of suppression. I mean, that's what it seems like to me. It's a form of suppression. And I know there's a lot of money offshore that wants to come here, but all of this that's happening, it's going to kind of stifle that investment, that money offshore from coming to the States, in my opinion.
I told my wife, and the silver lining in this cloud is, and in my business, we deal with private equity and alternative investments, and as all this is transpiring, we're going to see the equity markets and the bond markets tumble because of that lack of confidence. Consumer confidence is going to be at its highest point as we go through these changes, and subsequently these markets are going to tumble. And as they do tumble, though, those people who are looking for areas to invest are going to look at the private equity markets, the type of deals that Mitt Romney came out with Staples and those type of companies that that are going to be only available to the accredited investor.
Well, I think that I think President Obama, should really think outside the box and bring in Mitt Romney as some sort of advisor on business, because he needs someone in his stable that can actually help job growth. Because you can go make all this. Go ahead.
They did ask him that just the other day in a news conference, and he kind of chuckled and said, "Well, I've only been elected for a week now," and he goes, "I haven't even had a chance to make a phone call to Mitt Romney."
I mean, I think right now that the government, the president, Congress, the Senate, they all have to think outside of the box, because it's not a Republican or Democratic thing. Guess what? It's an American thing, and we have a problem.
Right. And calling on Jeffrey Emmel of General Electric, who paid absolutely no corporate tax last year, is not the person to call on. Calling on a guy like Mitt Romney, who has paid his fair share of tax and has stimulated the economy with Bain Capital, and he ran successfully, governed the state of Massachusetts, and he implemented a health care program similar to Obamacare, but not as costly as Obamacare, and was able to achieve a majority of the citizens of Massachusetts to provide health care. So you're absolutely correct. I think that it's going to take think tanks as well as other individuals, all the people to come in that 10-letter word, compromise.
Yep. They need to do that. And again, you look at the president. Forget about Obama. Just the president of the United States. That title. You wear two hats. First, you're the leader of the free world. Second, you're running the biggest company on the planet, the United States. So you need some business acumen in order to go in and keep the machine running. And I think that's something that we've been lacking over the past 4 years.
You're absolutely right, Lou. And a senator who had 2 years experience in Chicago and who was a professor previous, has no domestic policy experience, no foreign policy experience. He's going to need all the assistance, and he's going to have to take advice from his Mr. Clinton and President Clinton himself, who was instrumental in coming to the middle. When Congress was shut down, President Clinton had to come to the middle to work out a bipartisan agreement.
And this is the stuff that needs to be done. The egos have to go out the door. They have to. And I keep stressing that, but it just it kind of riles me up a little bit when you have something like this that's not only going to impact us, it's going to impact the next generation, and it's going to impact the next 4 years in a big way, because so much damage can be done now that it may take us a decade to recover. It's possible.
Oh, absolutely. And you're not going to see recovery, Lou, until you see that housing market start to come back and come back strongly, because that housing market creates a lot of jobs.
Yep.
And without those jobs, you're absolutely right.
Yeah, and that's the thing too. The housing market, as I mentioned earlier in the show, first-time home buyers, those numbers are increasing, and that's great, and it does help with increasing the value of the homes in a particular area, and it's good for the investors that own those homes. But the problem is you have no lack of investors out there to buy, real estate, whether it be residential or commercial. Okay, you have no lack of buyers out there. Problem is that for them to go in and start acquiring and start building, what's the incentive if you're going to get hit with all these ancillary taxes on your growth. You get rewarded for growth by getting taxed up the kazoo, for the growth that you're doing and for the jobs that you're creating. So, what's the incentives?
It's going to be interesting also because a lot of the jobs that are created also are in the defense industry in states like Virginia and Washington D.C. and all of them on the East Coast Maryland that rely on defense spending to stimulate their economies. I've got an 18-year-old daughter, and I admit I'm fearful for her future.
Yeah, and you have every right to be, because you're right. Defense spending. It does bring jobs to Virginia, Maryland, Washington, even Texas and California. The amount of federal employees in these states is astronomical, but that also contributes to the housing recovery in those areas. You start cutting that spending. You start cutting people's salaries. Now all of a sudden you're going to have ghost towns.
Look what happened to Pennsylvania when the price of steel was uncompetitive and we were buying from the Japanese. Ghost town. It became a ghost town. People had no jobs; they had to leave, and I remember that because you had I forget the mayor of the town of that town. He was trying to have a resurgence of the area, but the reality is when you have your main product there, and it's not viable, industry for you anymore. What are you going to do? You have to reinvent yourself, and that's something they haven't done over there. And I think that it's cutting the defense spending, is going to be detrimental because you have a lot of people in the military. They depend. This is their life. That's their job. You cut that, what are they going to do? They're going to go into the open market to go find a job that's not there, and they're going to compete with college graduates that are looking for jobs that are not there. So, really, what are we doing? And my wife is a nurse, and when you look at the healthcare issue more closely, it is very disturbing because there are people that do not have health insurance because simply they elect not to spend the money on health insurance, and we already have Obamacare. If you go into a hospital and you're indigent, that health care is paid for by other taxpayers. So the need to go ahead and implement a health care system that is going to raise people's taxes in order to cover those people, I think was unnecessary.
But yeah, definitely unnecessary. Again, that was something that made no sense. Still makes no sense to me.
And he stated to every American, it's not a tax increase.
Look at us now. Oh, look at us now. We have all types of issues going on here. John, we're coming towards the end of the show. I love having you on because we can go back and forth with a lot of things. But do you have any? What are your final thoughts on the fiscal cliff and what we're facing?
Well, I think that they will. Both parties will come to the middle. I think, as you mentioned, there is a lot riding on this, and I sincerely believe now that President Obama is done with his campaigning and he's reelected, he's got nothing else but to focus on this fiscal cliff and work with the opposing parties to go ahead and come with a resolution that is going to avoid this fiscal cliff. And I think he understands that. He's an intelligent man. Speaker Boehner understands it. We all understand the ramifications if we don't, because as I mentioned before, we saw what happens when both parties in the Clinton administration couldn't come to an agreement. They shut Congress down. They shut the government down for 4 days. And this will be far greater, far more detrimental if we don't come to this type of an agreement and compromise, as I mentioned. And I think both parties realize the need for that compromise is stronger than ever.
I agree with you 100%. John, why don't you give your website before we get off the show?
Absolutely. It's very simple. It's www.reocapitalllc.com. And as I mentioned, working with both those private equity deals and with alternative investments, I'm seeing already an increase in interest and levels of interest by various firms to come up with some structures to take all of these great ideas that all these Americans have, bundle them together inside of a private equity investment fund and bring that fund to the market. So the level of that I've seen escalate just in the past month.
And you know what? I think that's something we're going to definitely talk about next week, John, if you don't mind. We're going to really get into it because I think our listeners need to hear this stuff. But, thanks for coming on the show, and we'll have you on next week. And we're going to go a little deeper into the private equity sector.
Thank you, Lou. I appreciate being on your show, and it's always a pleasure.
Same here. Thank you, my friend.
You're listening to UCW Radio. In your face.
What we got here is a failure to communicate.
Oh, have I got your attention now? Greed, for lack of a better word, is good.
You know what I mean?
Money to be made in a place like this.
Money never sleeps, pal.
You're crazy. Don't run when you lose. Don't whine or hurt.
You know what it takes to sell real estate? It takes brass.
I